Good morning, everyone, and thank you for joining Volpara's quarterly results investor webcast for Q3, covering the 3-month period ended the 31st of December 2020. So joining us on the line today, as you can see on screen right now, is Volpara's Group CEO, Dr. Ralph Highnam, Volpara Health CEO, Catherine Singson, and CFO, Craig Hadfield. Before we hand over to Ralph this morning, please be advised that all attendees are in a listen-only mode. Today's event will include a presentation followed by a Q&A. To ask a question, you can either type it in to the Q&A panel below, or you can press raise hand to speak with Ralph, Catherine, or Craig. Just be advised we'll hold on all questions until the end of the presentation. This presentation is also being recorded. I'd now like to hand over to Dr. Ralph Highnam, CEO. Ralph, please go ahead.
Cool. Thank you, Sam. Hi, everyone. Thank you for taking the time this morning to hear about our strong Q3, which ended 31st of December 2020. Volpara is a health technology company whose integrated breast care platform assists in the delivery of personalised patient care and whose business model is predominantly based on software as a service, or SaaS, and we're on a mission to save families from cancer. We have much to cover today, including the traditional 4C cash numbers, which again show strong cash receipts despite coronavirus, strong sales growth to give ARR, or annual recurring revenue, of just under 21 million New Zealand, low churn, so we retain about 20% of the US market now for screening. The latest information we have re breast density in the US around the FDA legislation. And then, we want to give you some exciting news about some of the genetics partnerships which we've been working on for the last year, and our plans to really start to accelerate now out of COVID as we start to see an end to the pandemic with all the vaccines and other things coming through. I'm very happy to be joined today, as Sam just said, by Craig Hadfield, our CFO, and by Catherine, based over in Silicon Valley, and we are very happy to answer any questions at the end of this call. Before we jump into the main commentary, let's just note the changing US dollar versus New Zealand dollar. The US dollar has weakened by about 10% over the last quarter. That obviously reduces our cash receipts and ARR, but on the plus side, reduces our US costs, which account for about 50% of our cost base. So please bear that in mind as we go through these numbers. Okay, let's review then the 4C cash metrics, which were posted up earlier this morning onto the ASX platform. We're happy to say that during Q3, we had cash receipts from customers of over $4.6 million. That's above what we recorded last year, despite our moving from capital to SaaS, despite the US dollar weakening, and despite the effects of coronavirus. Looking more deeply into those cash receipts shows that the receipts from SaaS customers actually rose by more than 20% over that period. And over the full year, our overall cash receipts are up by over 20% as well. Those receipts demonstrate what we've talked about a lot since coronavirus and the pandemic started: the resilience of the company, the resilience of the business model, resilience of the industry, strong demand for our products, and a strong desire globally to use our products to help women have early detection of cancer. During the quarter, very pleasingly, we had net operating cash flow of just over New Zealand $3 million. That is very much ahead of internal expectations and well within our budgets, and the fourth quarter now of reducing outflows. Cash on hand at the end of Q3 was just over 60 million, obviously very healthy, and the result of the capital raise in April 2020, which aimed to strengthen the balance sheet, but also give us the ammunition for potential further M&A should the right opportunity arise at the right price at the right time. And certainly things are starting to move now on that front. Turning now to the SaaS, or recurring revenue metrics. Let me remind you that most new quotes for any Volpara product are now SaaS, although there are a few still historical capital deals coming over the line. In fact, we've got a small one today from Taiwan, which is always good to see coming in. During Q3 then, despite coronavirus and the lack of physical trade shows, including our biggest trade show, RSNA, which is usually in Chicago, we booked our largest ever Q3, adding over $700,000 of net new ARR, or New Zealand 1.1 million, taking our total to $13.5 million US dollars, or just under 21 million New Zealand dollars. I think fair to say Catherine and the whole US team did an outstanding job during that period, as did our sales team in APAC in particular. That jump up then was in total ARR was somewhat offset by those US dollars, which we talked about at the start. The strong Q3 come from a mix of very significant upsells, major new deals, and the continued migration of customers from the older versions of MRS products to the latest one. Many of the deals were multi-product Volpara breast health platform deals, and they really show the appeal then of that platform, but how important and successful the acquisition of MRS was in June 2019. The range of ARPU for those deals range from $1.43 to just over $5, depending on products and volumes of women being screened. And our overall ARPU actually jumped 5% up to $1.22. Net churn of ARR remains low. We continue to have at least one product helping about 27% of the US screening population. Plus, of course, now many more in Queensland, thanks to the Volpara Enterprise deal we signed with them for 5 years. This is the second public screening program service signing up to Volpara. And all these installations, all these deals will be watched and noted globally. But also, the other important thing for us as a company is we're incredibly humbled to be given an opportunity to help the women in the lives of many of our early investors, which of course, many of those live around Brisbane and so on. That install base and that 27% install base continues to be vital over this new period. With no trade shows, now's the time to really focus on the pipeline we have and mining that install base for upselling opportunities, which we've done extremely well in Q3. But although I should add, we do have a strong pipeline now, new sales lining up at bigger sites as a result of the strategic changes we made in mid-2020. One very notable deal we did during Q3 was one of our biggest and oldest customers based in Texas, moving from Volpara Enterprise, our enterprise-wide quality assurance tool, to a much broader package, renewing for a further 5 years in the process for a deal doubling the ARPU. We as a company, obviously SaaS, we live and die by customer happiness. It's great to see these customers coming back to us and buying more. So look, in short, Q3 was strong despite coronavirus. Sales pipeline remains strong despite coronavirus. Nonetheless, we know in-person trade shows and coronavirus obviously re-emerging strongly around the world. Uncertainty does remain, and we need to keep on our toes to adjust to the varying business environment as we go. Okay, before we go to questions, I really want to update you on two things. One then, we've not heard any updates about the US breast density legislation. Obviously, it's been an extremely chaotic and confusing time in Washington and around the FDA in particular, but with the transition to a new administration there, we really do believe things will start settling down, and we'll update you as soon as we hear anything about that legislation. Secondly, in April last year, we announced a partnership with Ambry Genetics, and it's taken a while because of coronavirus to get installed, to get some sites up and running, but it's really starting to bear fruit, and we've started to see the first cash actually get paid over to us now. And we just want to talk really about some of the interesting dynamics at play in that relationship. We agreed with Ambry to help our customers, the breast imaging centres, identify women at high risk who should go on to additional imaging, such as breast MRI or even genetics testing with Ambry. Now, remembering that breast density is a critical component of those risk models, and Volpara Density is the only commercial density product in the world's leading cancer risk model, Tyrer-Cuzick 8. Excitingly then, the first Volpara sites now to go live with this new genetics program have detected significant numbers of women with the BRCA genes. They are the kind of women like Angelina Jolie who are extremely high risk of breast cancer, and you really want to get in and act and help them reduce their risk very, very early on. So we're very happy to see the kind of numbers we're seeing and the number of those genes and the number of women that we're helping. But importantly then, commercially, we've also started to receive those first revenues from that new service being offered. And as we've indicated in the last quarterly, early indications are that those sites using our platform to score risk and then offer genetics testing, our average ARPU is increasing very significantly to the level that it could actually be pretty much a game changer for us. More widely then, just in the US and elsewhere around the world, we really are seeing a strong interest in Risk assessment, genetics testing, and that's driving many of those upgrade sales we talked about. That interest is coming as people fully understand the benefits of early detection and risk assessment to get to that point. But also then many of the societies like the American College of Radiology in the US are starting to push risk assessment from, for example, they are pushing risk assessment at age 30 to understand your risk and then set down your screening protocols. But then you have other groups now like CMS, which sets down reimbursement levels, indicate they consider doing breast cancer risk scoring as a key indicator of quality of a breast cancer service. And they are moving in the US to value-based care, where the higher the quality, the more reimbursement you generally get. So that move from CMS, you are going to get more reimbursement. So it's an incredibly important dynamic for us going on there. So those dynamics obviously great potential. We're going to look to ramp risk then and genetics relationship this coming year. Look, with that then, I'd like to open the floor to questions to myself, Catherine and/or Craig. Thank you.
Thank you, Ralph. So just a reminder that if you do wish to ask a question, you can enter it in two ways. You can enter it in writing using the Q&A panel below, or you can press the raise hand button to speak with Ralph. We'll just pause for a few moments to allow for questions to come through. The first question to come through is, any idea when the FDA will come through dates-wise?
Yep, it's a great question. So this is around the FDA legislation on breast density. As I'm sure everyone on the call knows, many states have got that legislation in place now. The FDA 18 months ago said they were going to introduce it as a federal legislation. That was meant to be October, but October last year was obviously full of other issues in DC and the US in general. And they then said there'll be an update in the fall, which is around now, and we wait anxiously to hear more. With that move to a new administration, the FDA commissioner has changed, so no doubt there is some discussions going on. But as soon as we hear anything, we will let you all know. But we are at the whim somewhat of the US situation settling down somewhat.
Yeah, I would also just add to that obviously COVID has just taken a front seat in so many ways that it's been a challenge on that front. But as many of you know, we have laws in, I think, 37 states, and so, but certainly a federal mandate would be excellent.
Thank you. The next question is, changes on the competitive landscape?
Yep, that's a good question, Sam. Yeah, we are seeing, always around RSNA, which is December, you always see, what the competition is doing. And we still see no competition out there with the whole platform. We see bits and bobs, we see new density players coming on, trying to get into the market, or we see a new update to someone doing analytics, but we still see no one really coming to the party with a fully integrated platform, and that really is one of our key differentiators. But I think fair to say, people are seeing our success. They are starting to buzz around the space more, and they are looking ways to get in. So it's absolutely critical for us as a company to keep on innovating, keep on pushing ahead, and keep on leading this space.
Thanks, Ralph. We've had a question come in around the BreastScreen Queensland. So the question is, how many women are involved in the QLD screening program, and has that contract been included in the ARR?
Craig, correct me if I'm wrong, but I think it was about 150,000 women or so in the Queensland Public Screening Service. So we are extremely pleased that another public screening service has signed up, and we're extremely pleased, as we said earlier, to be helping many of the women in the lives of the early investors into Volpara. The ARR from that deal has been included into our update. It is an interesting deal in that the ARR we've included is for Volpara Enterprise. They're starting off on quality assurance, but certainly there's an intent, and it's already kind of built into the contract that we can extend to include other products as Queensland and kind of the overall Australia kind of desire for information change. Craig, I'm not sure if you want to add to that.
The only thing I'd add is to what you already said is it's originally just for enterprise, so it excludes density and other modules as well. Those are already factored into the contract and already priced. So sort of as Rolf alluded to, if, for example, density legislation changes in Australia that mandates it, we would automatically increase that ARR and switch on access to density. Based on the pricing, that would significantly increase the contract value. So this one was about getting our foot in the door, landing and expanding, basically.
Thank you. The next question is, can you explain a bit more about the Ambry Partnership and how the process works when a woman comes in to be scanned and how they get referred?
Yep. Let's talk about this. So there's a couple of ways that the partnership is working, but I'm going to talk about the ideal way, which is what our engineers have just released and where we're moving to. So let's say you've got a full Volpara breast health platform. The woman comes in to get screened. She fills out her information into a tablet, which is a Volpara product, such as BMI, family history, and so. Breast density or she has the x-rays. Breast density is computed by Volpara Density. That flows into the risk calculator. That risk score then so the density gets combined with the family history and other factors to give an overall risk score. If that is over a certain number, then the site is informed that that woman might be eligible for breast MRI. But also, if it goes over a certain number, the site is asked, do you want to, this woman is actually eligible for genetics testing as well. She might be a BRCA carrier. Do you want this, what they call a test request form, automatically sent over to the genetic counsellors related to Ambry? If the site has agreed to that, then those forms just automatically flow to Ambry. Genetic counsellors contact the woman, and again, if she's applicable, if she wants to do it, she goes on for that genetics testing, and then those genetic testing results also flow back into that clinic. The reason I kind of spelled that out a bit there was, the key to all these things is workflow, and those electronic forms, the electronic transfer of data, and it just makes the whole thing simple and easy for everyone involved, from the woman who can fill it out on a tablet or on a phone before she even gets to the clinic, all the way through to that electronic referral at the end. Now, the way it kind of commercially works is every time a woman actually goes on for genetics testing, Volpara gets paid a certain sum of money. That number is confidential, commercially confidential, but as we said in the release, it does significantly increase our ARPU. So we're very positive and pretty excited around these relationships, and we look very much forward to accelerating in that direction over the next wee while.
Thanks, Ralph. The next question is, can you tell us more about the deal in Taiwan and other activity in Asia, please?
Yep, at the start of this year, as COVID hit, as we told the market, we were going to focus on US, Australia, New Zealand. Frankly, we can't. We used to go up to Asia quite a lot, Japan and Taiwan and other places up there. To trade shows to tell people about the products. We've kept on keeping things warm remotely, and we've got a new APAC person based actually out in Sydney, who's doing all this work now with our distributors up there. And it's a small capital deal for density in Taiwan. So yeah, we've still got distributors in South Korea, Japan, Taiwan, Singapore, Malaysia, all working hard for us, all being run out of our Sydney base. Most of those deals tend to be capital deals, and just like in some ways with Europe, our focus in Asia is getting all the luminaries, which we just about have now, making sure they're fully aware of the Volpara brand and really getting them doing world-class research. So countries up in Asia can really start to understand breast density and how important it is to breast cancer screening and the risk of the women up there.
Thanks, Ralph. We've got a couple of questions here about the Australian market. So the first one is, what is the overall penetration in Australia and customer appetite locally?
Yeah, so the reason we, as many other people, focus on the US first is the US is mostly private clinics. Whereas outside the US, it tends to be public screening. So most screening in Australia is public screening. It's around 800,000 women a year are screened in that public setting. We now have two states, two of the smaller states, signed up with Volpara Enterprise. They are the innovator states. So just in terms of public screening, you've got the 150 plus the other one we've signed up, which hasn't gone live yet due to coronavirus. So public screening, we're probably covering 20-25% of the women there. So we've got a long way to go to helping many more women there, and plus 200,000 over here in New Zealand. However, in private screening, we've got we've obviously announced some of these deals before, like Sonic Queensland. We have some excellent sites down in Melbourne, some excellent sites in Sydney. And if you go to places like the Wesley in Brisbane, but then if you go across to Adelaide, almost every single clinic in Adelaide actually has our software as well. So it varies very much state by state and private to public. We're happy with where we are now, but obviously we want to start pushing on and really getting those big public screening programs in the bigger states to recognise the value that we bring.
Thanks, Ralph. Now, you did answer a little bit of this in the prior question, but the next question is, when do you expect more general acceptance and adoption from other states of the value of your product in Australia following the Queensland example?
Yeah, so these public screening programs, and the reason we were so excited last year in December when we got our first one, and then now Queensland's come on board as well. They all talk to each other. They all follow best practices, and globally, not just in Australia, but globally. So they are important. We are talking to all of them. We have trials underway with at least two of the other big states in Australia, and we're doing a lot of work here in New Zealand in various ways. And obviously, we've got these huge trials going on around Europe also. So look, we are working them. They are all slow. On the other hand, they're all extremely high quality, and they all want to do the best thing for the women. And as soon as they see that hard evidence coming through from those studies like Project Dense, which we announced last year, plus when they see the results from Queensland and elsewhere, we're very confident in starting to kind of drop the dominoes one by one over there.
Thank you. And the next question we have is, can you contrast and compare Volpara with Prometicus?
Well, that's pretty easy. Prometicus is fundamentally an enterprise-wide viewing platform, whereas our key skills are around AI on images and in data handling. So with the acquisition of MRS, we move very much from being an imaging AI company to being an imaging plus data AI company, and we've got a massive data set behind us, and we see massive potential in those data sets. So although we both operate in the radiology space, we very much are targeting different customer sets, and we've got very different offerings to those customers.
Thank you. We've had a couple of questions come in around cash flow. So the question is, when will you expect to be cash flow positive?
So always a question for Craig, but certainly as you've seen in our 4Cs over the last period, part of our planning, especially during coronavirus, has been to keep growing, keep solid growth, but really get the company orientated towards cash flow positive, if that makes sense for us to do so, compared to going for much more substantial growth. Craig, do you want to add a comment on that?
Yeah, I'll just add, we do have a significant cash balance. So at this point, there is no concern about having to do another capital raise, et cetera, et cetera. But to reiterate Rob's point, at this point, we're focusing on growth. But we have got our costs under control. And as you can see from the 4C, the cash outflow quarter on quarter is trending downwards consistently. So we're definitely on the right path. And we hope balancing growth versus cash flow break even as well as we can.
Thank you, Craig. The next question is for Catherine, and it is there any update on Project Thumb?
We continue to work with prototype partners on Project Thumb, and we'll probably have an announcement on the release for 2021. Certainly that's been, I think it started with one, and now we have 3 prototype partners. And so we continue to evolve that and work across the ocean with our product marketing group out of New Zealand as well. And so we have people both in Seattle, Washington and Wellington working on that. So it's an exciting move, as you know, into communicating more succinctly with women in a visual approach, and not just the words on a letter following up on a mammogram.
And Catherine, I'll make one other point on that as well.
Yeah.
Project Thumb is incredibly important for women. We are utterly convinced on that. It's going to drive demand for our products as well. But also, we had a question earlier about competition. One of the great things about Project Thumb is it involves our imaging skills plus our patient tracking software. So it's kind of that our ability to integrate those products really puts us way ahead of the competition around having the ability to do things like Project Thumb. So they're really kind of unique differentiators and substantial barriers to entry.
Thank you. The next question here is there a projected ARPU for the end of the financial year? What are the main issues that affect the increase or decrease of ARPU?
Yep, we're very, very pleased with the way ARPU is going. We've seen a jump up in ARPU of 5% over the quarter, and it must be up. It's been up very significantly since the start of the year. We've not put out there any projections on ARPU, but Craig, I'm not sure if you want to talk a bit about it, but clearly we see that increasing, and we see multiple ways of increasing it from where we are.
Yep, so a couple of things on that. I think if you go back for the last sort of 4, 5, 6 quarters, you'll see we've consistently increased the ARPU at about 5% per quarter. So I don't see us deviating from that trend much right now. So you can take $1.22 and add 5%, and you're going to be on the margins there. The couple of things that impact on ARPU are obviously new deals. So the more deals we sign, of which every single deal we sign today and since the acquisition of MRS are significantly higher than $1.22, are obviously adding to that. Anything that decreases ARPU would be potentially customers that we've lost. But the ARPU calculation is simply ARR divided by our market share. So if our market share goes up or down, if we lose customers or gain customers, that impacts on the number. Likewise, as the ARR number increases. So our focus is on minimizing churn and maximizing net new ARR, and with those we will continue to see an increase. And we are definitely going to be seeing increases every quarter from now on out because our ARPUs are significantly higher than $1.22.
Thank you, Craig. We've got time for a couple more questions, and if we can't get to all of them, we'll make sure we follow up after the webcast. The next question is, can you please talk about the current sales model and how you're attracting new leads?
I can take that one. We put a lot of things in place about 6 months ago with the reorganization of our sales force to amp up our digital efforts in marketing. And as Ralph said before, with no RSNA and very limited in-person sales, that has really been a great investment for us. I think also too, just the team working together across not just our direct sales force, but our customer success organization and our clinical experts that have deep knowledge within the industry, as well as our new marketing communications group. And so it's a combination of many different aspects of education. We have monthly webinars where we profile different customers each month. And we've had a tremendous amount of participation in that, as well as remarketing that content. We've also gone into certain aspects of digital advertising. We've addressed SEO and different search engine optimization to make sure that we come up in all of our searches. And we've also even done some telemarketing. And as you know, we've rebranded and we're getting ready to relaunch our website into a very different look and feel. So all of these combined has really created momentum for us within the pipeline. I think, 10 months ago, none of us knew how this would go. And so I'm incredibly proud of the talented team that we have across the world working together to make sales happen despite COVID and the devastating effects it's had here in the US. You want to add anything, Ralph?
Yeah, Catherine, let's just advertise. I think there's a webinar coming up this week, I think, from a couple of big US sites. If you go to our LinkedIn page, you'll see we have another webinar. It's all about Equip and how to make your whole experience with Equip is all about quality in the US. Much easier to deal with. When the FDA auditor comes in, you use Volpara and print out a report and you're there. So there's a whole webinar on that this week. So if you go to the LinkedIn page, you'll see the details, and please do feel free to join that.
Thank you, Ralph. The next question is, expanding on the competitor landscape, there was a news article in late December around the world first discovery using AI to examine mammograms and can alert those who are at high risk years earlier than other methods in collaboration between Melbourne Uni, BreastScreen Victoria and Cancer Council Victoria. What are your thoughts on this?
Yep. So that work is by Professor John Hopper down there in Melbourne. I've known John for probably 20 years now, and we actually very closely with John on some of that work, and we have a project funded by one of the cancer charities actually over there in Victoria to work up some of those ideas. So yeah, we're pretty excited around that. The whole concept is that breast density, it's not just breast density that's important. There are other factors in the image which are also indicators of breast cancer risk. So we're working with John looking at breast density plus these other factors to come up with an even stronger risk factor a bit further down the road. I will say it's still quite early days on that. There's been several good publications, but you want to get to that point where it's reproducible on any X-ray machine anywhere in the world before it's really commercially ready. I don't believe we're quite there yet, but certainly we look forward to continuing to work with John and the other people on that project.
Thank you, Ralph. We're getting close to our end time now, so I'll just ask one further question, and if we didn't get to your question, we'll make sure we follow up after the webcast. The last question is, thank you for your answer regarding the comparison to Prometicus. Can you elaborate on Prometicus's initiative to enter the breast screening area and why Volpara will stay ahead of them?
Yep. So obviously, I think they were targeting FDA for June or something this year, but I've not seen them get FDA clearance, although I know they've got CE clearance. So the several kind of aspects of that. One is Prometicus targets these huge kind of academic networks like Yale, for example, where they're doing their breast density work, which are, they are part of our market, but only a small component really of our overall market. So the market segments that we target really are very, very, very different, although there is some overlap. Prometicus breast density, from what we've seen on their CE marking, is very similar to the approach from Hologic and other companies around the space. They just go from A, B, C, D, which is okay in certain circumstances, but we prefer a much more scientific basis. We believe breast density is a continuous number because we believe each breast is different, and you shouldn't just characterize it as A, B, C, D. It's actually a continuous range. And it's those continuous numbers which really make breast cancer risk prediction in cancer risk tools like Tyrer-Cuzick much, much, much more powerful. Imagine if you are if you remember, we've got A, B, C, D, right? But C is a huge range. The breast cancer risk for a low C versus a high C is very, very, very different. So if all you're doing is giving A, B, C, D, you're not differentiating between a low C and a high C. And it could be with Volpara, a high C, it might actually qualify you for MRI, which actually might detect a cancer and save your life. So there's a lot of power in continuous measurements, and we are a big belief in the kind of scientific continuous measurements of density rather than the subjective way of doing things.
Thank you, Ralph. And sorry, we will just ask one further question that's come through before we hand back to Ralph, and that is, can you talk to progress on any acquisitions you're looking at?
Yep, obviously, we said last year, April time, that we raised money there to strengthen the balance book through COVID, because there was a huge amount of uncertainty around COVID, obviously, but also to look at M&A opportunities. But it always has to be the right deal at the right time at the right price. We've been very patient over the last 9-10 months, and I have to say over the last month or two, opportunities have started coming towards us, which are much more properly priced given the world situation. And certainly we are starting to see much more encouraging signs now around M&A and people being reasonable, and there's some pretty exciting deals around there now, which we are continuing to look at, but with that same sense of discipline that we're not going to pay overpriced. It has to be the right deal at the right time at the right price.
Thank you very much, Ralph. And we will wrap up our Q&A at this point. I'd now like to hand back to Ralph for some closing remarks.
Cool. Thanks, Al. Thanks for your attention today. Thanks, Craig and Catherine, for coming on. Thank you, particularly Catherine, for an outstanding Q3 from the US sales team, but also the Anton and the Australian sales team have also done an amazing job. Thanks for your time today. You can see that we're very excited about where we are, where we're going, but also we're incredibly pleased with these initiatives like Project Fund coming through to really help empower women, all the way through to things like the Queensland deal, and giving us the opportunity really to help many of the women that actually live around us and live around our investors. So with that, thank you, and we look forward to seeing you on the 4C in Q4. Thank you.